What's up, YouTube? It's Todd Horst here with Tasty Tracker, and here's the second episode in the 2021 Small Account Challenge. So today I'm going to go over a lot of the basics. So for the new people starting on with this challenge, you'll be able to watch this video, hopefully come up to speed on how the mechanics of everything work. And then future videos really are just updates on the account. I'll show what positions I entered and closed and why and what I was thinking. So let's jump into it. So today I entered in one position for Apple. That's already down $20. It was down as much as $50 or so. So depending on when you entered, you should have gotten a better fill than I got. Since we started off with about $1,000 in cash, the $50 that I deposited will take 3 to 5 days to come through. And I have not sold the series stock. So I will show the Robinhood account here in a second, but for right now, we'll say we've lost $20 and the current net liquidity is $980. Net liquidity is if I were to close out all of my positions at this very second, what could I get to be liquid? And so I'll show you again how to see all of that in Robinhood here in a second. So first, I want to show how I entered in the trade in Robinhood desktop. You should definitely get familiar with doing it on desktop. First, I feel like that is the way to go if you're able to. I know a lot of people are at work, and so they don't have the ability to do that. If you can, though, enter in on desktop. Once you get comfortable with doing that, then get comfortable with doing it on your mobile app. And especially if you're a beginner, you might want to have both your phone and the web browser up at the same time to make sure that you're clicking the same thing when you're learning the mobile, and see that the values are all the same. And that gives you the certainty that you filled things out correctly on the mobile app. So, when you're first getting started, you tend to click around quickly and make mistakes, and we definitely don't want that to be the case here. If you do by chance enter in the wrong position, whether you chose the wrong expiration or the wrong strikes, immediately close out the position. It does eat up a day trade, but my style of trades do not use day trades, so you should have plenty in reserve. So you close that position even if it's at a loss, and you open up the correct position. If you hold on to that position, there's no guarantee that, and there's no guarantee in anything, but there's no guarantee that that position will work the same as what I had put in and that you had intended to put in. So I do this every couple months, and usually somebody will correct me on Tasty Tracker, which is great because I have other people checking out my trades. Sometimes it's just me entering it incorrectly in my site. Other times it's that I actually executed it incorrectly in the browser for whatever reason, in the broker, because I'm tired or whatever. So yeah, the whole point here is if you enter something in incorrectly, close it out immediately. Don't mess with trying to save that position. Maybe you got lucky and you'll make a couple bucks, but very frequently you'll lose a couple bucks. But those are the lessons you'll learn to take your time in entry. And I think especially Robinhood for spreads is more annoying to enter, and so therefore it's easier to make those kinds of mistakes. I'll show you how to do the exact same trade here in Tastyworks, which is my preferred platform. I do have a link in the description. The downside there is there's commissions, and it requires you to open up another account. So that is the reason I'm doing this challenge on Robinhood. I did last year's challenge on Tastyworks, and so that is still my preferred platform, but I'm doing it on Robinhood here to save $500 and to sort of meet people where they already are and show the mechanics so that people learn how to do it on Robinhood. And while you're at it, you'll probably learn how to do it on Tastyworks as well if you follow along. Okay, so let's jump over to Robinhood. First of all, you start off on the main screen here. We're just going to search for Apple, AAPL, which I initially spelled incorrectly on Twitter this morning. Then you're going to see a screen like this. It will not have this section down here because you won't have any positions active. You'll see something like this where it'll have just the description about the company. So if we did review order, etc., this would just be buying or shorting Apple. But what we want to do here is do the trade Apple options. Click on that. Now, 98% of what I'm going to do on this challenge is short put spreads. That's also known as credit put spreads or a put vertical. These are all synonyms for one another, so I will use these all interchangeably as they come to my mind. So you'll just get used to hearing the different things and knowing what I'm saying when I say that. But so basically, I start with the sold leg, and then we want to click on put here. Then the very next thing you want to do is make sure the expiration is correct. Entering this in, you'll see drastically different prices, and they move much quicker the shorter days to expiration that there is, and that's what DTE stands for. So these are all weeklies, and I'll show you this again in Tastyworks in a minute, but Robinhood doesn't denote which ones are weekly expirations and which ones are monthly. We know monthly expirations are on the third Friday of each month. So if I click on the calendar down here, I know this month's expiration is on the 15th, February's is going to be on the 19th, and March is going to be on the 19th. So they're all very consistent. So I can come down here and say, March 19th, that's going to be the monthly expiration. So that's what we chose today. Then let me go over here. I did the 125, 130. We're selling the one that's closer to the money, the higher one. So if you go back and watch my Iron Condor videos or vertical videos, it'll really help you out. I can leave a link in the description, but very frequently you'll see actually reverse of what Robinhood has. So Robinhood has the lower strikes here, down here, whereas on Tastyworks and Thinkorswim, it's actually, you're going to see the puts starting with the lowest value go increasing as they go down on this half of the screen, and then calls on this half of the screen. I'll show you that in a second. But anyway, so I sold the 130. So we're going to make sure we're on sell, make sure we're on put, make sure we're on the correct expiration. Then we're going to come up here and click the plus. Then we're going to switch to buy. We're going to make this a $5 wide spread, and we can hit plus here. You can see I already have one sold here. That's what the -1 means, and the +1 here. But until you open the position, you would not see that. Okay. The way we know we have this set up correctly is that it says put credit spread up here. Again, spread is synonymous with vertical, and credit is synonymous with short. So put short vertical would mean the exact same thing. Okay, so now we can see the total credit is $250. Again, I filled mine at $221. So I'll show you how to enter this in Tasty Tracker as well. But if you see a minus sign in between the @ symbol and the dollar figure here, that means it's a debit to enter. Because there's no minus sign here, that means it's a credit to enter. And then this is in the per share price. That's how you'll see it in all brokers. So it's $2.21 per share. And then we multiply that by 100 shares in each contract. That's why we know we collected $221. $279 is what the collateral is. And I can come down here and see max P&L is $221, $279. It's the exact same thing here because we only traded one contract. If I have multiple contracts here, then this number will reflect that. This will still say per one contract. So getting a little ahead of myself though, so let's go back to Robinhood. At this point, you would hit continue. Then you're going to put in 1. You're going to want to put in the specific price, not just accept what they put in here, just to ensure that you know the price that you're willing to accept. So you can see right here, it's flipping in between 248, 250. I want to make sure I get 250 in this instance, so I'm going to hit 2.5. And obviously the 0 isn't needed. The expires, you're going to want to put in good till day. Sorry. If you put in good till cancel, it will keep that order out there, and tomorrow this might be a horrible price to enter in these strikes. Who knows? It could be a very good price, and if it is a very good price, it won't fill. If it's a horrible price, you could have gotten better strikes or better pricing, etc. So You don't want to tie up your buying power for longer than today. And in fact, I will frequently put this order in. Let's just put it in for 280 because I know I won't get a fill. I'll hit review order and then hit submit. Okay, so now we can see that it's been placed, but it has not been filled. Once it gets filled, it would say 1 for 1. And then this is telling you the total spread width is $5 wide. So the total is 500. And then they keep the premium that you collected and the collateral to pay for the position if you lose, all in reserve. So if we go back over here, we can see 221 plus 279 equals $500. They will keep, Robinhood or any broker will keep that entire amount as collateral until the trade is over. Once you close out the trade, you will get whatever net out of it is. So if you lost, obviously you would have to buy this back for more than 221. If you won, you would be buying this back for less than 221. I'll go over all of this. This sounds very complicated. Watch this video again as needed, and then don't worry about it. Over the coming weeks, this will become very, very, very routine. Okay, so now I can see here that this order is just sitting out here. It's not has not gone anywhere. If I go back to the Apple stock page, I can see the one. There we go. I can see the one that I initially placed, and then I can see the next one that I put in just now. And so if I click on that one, this shouldn't be saying placed. This should be saying filled. Yep. Limit price here, 280. Oh, no, I'm sorry. This is my closing order. That's why you see a second one. Okay. So, yeah. So here's the one that I have, and it's not filling, it's not filling, it's not filling. I have it for 280. That means nobody's willing to meet me there at that price. So what you would do is cancel that order, re-enter in at a lower strike. And this again is where Robinhood really falls behind Tastyworks. This process of replacing this order is much, much better in Tastyworks. So I would hit cancel order and then go back in to trade the options, do it again, choose a little bit lower price. Maybe I would try 270 instead of 280 this time, and do that progressively, coming down and down and down until I get it to fill. Okay. So I'm thinking that might be everything you would need to know. Once you have the position entered, then I can come back here on Robinhood on the main screen, and I can see my overall chart. And then I can click over here is a list of the open positions. Robinhood is nice here. It does give you a chart for the value of this. So we entered in, somewhere down in here, and then it went against us for a bit. So you could have, according to Robinhood, you could have gotten as high as 260 for this trade, and now we're coming back down. Because this is a short position, we are betting on the stock going up. So if you're buying calls, you want the stock to go up. If you're selling puts, you want the stock to go up. And because we're selling, we want the value of these contracts to go to zero. And so if this goes down and down and down, if we see something like this, then that's good for us. The value of our position went up, even though the price of the contract went down. Okay. So I think that's everything with entering the position. Now I wanted to go over, while I'm here, where the figures are for the account. So I have this account balance page here in Tasty Tracker, and it allows you to track your account value. Robinhood does a better job here than Tastyworks, actually, where if you go back to the main screen, you'll see a chart of your overall progress. Now, with Robinhood, all brokers actually, you'll see these spikes occasionally or very large dips. Those are just pricing discrepancies, which usually happen at the very end of the day, and they'll get corrected the next day. But that's really why I created this, as well as Tastyworks, where it doesn't give you a chart. This is a beta weight here. This isn't the net liquidity of your account. So because Tastyworks doesn't have that, I have my own chart here. And if we just flip over to 2020, we can see here that we get a nice chart, and we get a nice history of everything, where we have the weekly percentage change, the daily percentage change with dollar, and some of these other figures that I like to track. Most of them are optional, so you don't have to worry about filling out everything. But let's go through what I entered in today. So it automatically puts in today's date. It will fill in the previous day's net liquidity. I put in 992 at the time that I had filled that out. It's currently sitting at 979 and 14 cents. I don't log the cents because that's more effort than I'm needing to track. So if I wanted to, I could update that now to 980. So let's go ahead and do that. So that is your net liquidity. Cash is over here on the account tab. So if you click on account and then you go down here and click on account, you'll get this screen. And the cash is this line right here. So why is this 1,220? Well, that is taking the $1,000 that I deposited plus the money that I collected, the premium I collected by selling that put spread. Okay, so I actually have that cash in my account. I just don't have access to use it. It's held in reserve by Robinhood until I close the position. Over time, we will see this cash value increase and increase. Buying power is going to be whatever your net liquidity is minus the cash that you have allocated, right? So we have 980 here minus 240. That would give us 740, somewhere in that range. I have 720 here. Extrinsic value, Robinhood doesn't have, or at least not at an account level, so I won't be filling that out. Collateral is automatically filled in based on the number of positions that you have open at the time. Deposit, you could add or subtract. This should actually be worded better, but you can add or subtract depending on whether you deposited or withdrew money from your account. For this challenge, I will not be adding or removing any money from the account. So it is what it is. I'm starting with 1,000 and we'll go with that. Okay, so how I enter this into, let's go into Tastyworks first, and I'll show you how I entered it into there. I didn't enter it in on this account. I entered it into a different account here, but you go to trade, click on Apple. Then we want to look at the table here, and look at that, I already had it selected. But if we didn't, we can choose, first of all, the correct expiration. So I would come down here and select March. Here's where I was saying the weeklies are marked with a W, and then the monthlies don't have anything. So I click on March. It's nice here. It shows me the days to expiration here. I can click up here and do a vertical short put spread and click go, and it will automatically place them on for me. Now this is way down here at the 16% probability in the money. So you can change that, of course. I keep mine there. And so if you did that, you would have to, do one of these things where you scroll up. Another way is to just click on the bid to sell and then the ask to buy. And we can see here what I was talking about, where the puts are on this side and the dollars are actually inverted, where the lower amount is on the top. And this is similar to a classic table view that you'll find in Thinkorswim and Tastyworks and a lot of other brokers display it this way. So if you can get used to using it or viewing it this way, then that's really helpful. Okay, so the sold leg is always going to be lower in Tastyworks, and because it's inverted in Robinhood, it's always going to be the top leg that would be sold. This is how we get a credit spread, because this one is always going to be always going to be more valuable than this one. And so we buy it for, say, $1, we sell it, this one, let me reverse that. We sell this one for $1, we buy this for 50 cents, then we're left with the credit of 50 cents. So it's always going to work that way. And when you do an iron condor, the reverse is true here. We're going to sell the 140 and then buy the 145 if I was going to do that. Now, if you did this one, you actually don't have to pay any more collateral, but you just collect more premium, which is good. The downside there is obviously we want the stock to land in between 130 and 140, which is a neutral position, not a bullish position. So that's not what I want. But again, notice here the top leg now is the sold leg. And so say the price were here at 135 is where I want it to land. These two legs that are closest to it are the sold ones, and then the outer legs are the bought ones. So a vertical is simply half of an iron condor. As far as the account values here, this is your buying power in Tastyworks. Your net liquidity is here, and then your cash value is here. So I like this display a lot better. Also, your extrinsic value over your entire account is here. You can also find that number over here. You can configure these columns, and so it's just a lot nicer view, but then you pay for that feature with commissions. The other nice thing up here is beta weighting, so I can uncheck all of this and click just on my Costco position here and get a nice chart that says if SPY were to come the whole way down to 360, this position should be fairly profitable. Or, I'm sorry, not SPY. If Costco came down to 360, this should be profitable at the time of expiration. So. And we can tell that anyway because I sold the 360 leg. But it gives a nice visual, and when you select more than one, this is where it's weighted against SPY. So we can see my overall account. If SPY came down here to 355, I'd still be green. And if SPY's above 370, then it's projecting that I would be profitable. This does skew here or there because not everything stays constant to SPY, obviously. So Costco might have an update tomorrow. Okay. Okay, so how I enter this into Tasty Tracker. So I already have it entered in here. And so I'm going to go over to a test account and we'll show you how to do it from scratch. Okay, let me just clean up this stuff. Okay, so I'm going to add an Apple, APL. Man, I did it again. AAPL, and then I'm going to just hit the P, and then I'm going to hit P again. Now that will get me to be a put vertical. I can hit enter, tab and enter, and that will bring me right down to the strikes. Then I can hit the, 325? Not 325, 125. So then I can put 125, hit enter again, and hit 130. Then I can click this up button. That will give me 1, and then I can go over to March. Now I can put in whatever I collected. In this instance, we'll say 120. It'll automatically calculate the collateral. Because this is Robinhood, the commissions will also auto-populate with 0. You can configure that per your broker per account. So in Tastyworks, that will increase there. And then you can put whatever notes you want. You can see the ROI, the max profit, max loss, and whether you want to publish the trade. If you're just copying my trades, you don't need to publish them. But if you are doing unique trades, then it's great to publish. Let the community give you feedback. If you do not publish them, they're only visible to you on this page. If you do publish them, then everybody will see them on the alerts page. So if you change these drop downs, it will change this as needed, but you can also click on these and say exactly what you did. Okay, so let's go ahead and hit save. Now it shows up here, it has the expiration here, how many days to expiration, the max P&L for this entire expiration cycle. So again, if we go over here to this one, I have many positions on, so I can see here I'm risking about 6,000 to make about 4,000. And then there are 10 positions total. Okay, back to the test one. If we click the header here, it will expand. Here are the details we just entered in. So we bought the 125, sold the 130. We always start with the lowest value one first when we're entering it in. Again, because this does not have a minus sign in front of it, that means we collected that. That's a credit to open. The commissions were 0, width was 5. And where this is particularly helpful is if you're doing an iron condor and it's not balanced, so one side has a wider spread than the other side, you need to know that for how much collateral is going to be needed. This section here is profit targets. So if you wanted a 0 profit, that means to break even, you would close this at 1.2. Now, why would you even have this here? Well, if you have commissions and you've rolled the position over and over and over again, you're going to incur a lot of commissions. And so this will go down and down and down. The cost that you need the value of the contracts to go to just to even break even. So if I spent $20 on commissions, I need these contracts to go down to $1 before I can even break even. 25 and 50 are just very common points for you to close at. So, it's all on what your tolerance is, your thresholds are. My threshold is to close at 50. As soon as I open it, I set a closing order for 50%. So in Tastyworks, it's really nice here. Let's cancel this order. Here's my existing Costco position. I can click on these two, do close position at profit 50%, hit that, start closing order. For whatever reason, it doesn't enable the button sometimes the first time. So there, it automatically calculates it for you and hits is 1 to 5, and I hit send. Wait a second. I think I closed that one without, I didn't even want to. Okay, so, well, this will show us how to close. So if we go over to the 2020 challenge here, Costco. Oh yeah, that's fine. So I think I had a closing order set for 104. So if I hit close position 1.05 and then say auto closed, and then hit save, this will calculate now the commissions that I have. Again, I'm over on the Tastyworks account now. I held that for 13 days, got a 35% return on my money, even though I'm closing it at 50%. The reason those aren't the same, 50% versus 35, is because we can see here my total collateral was 289. So I closed it at half of 211, but the 289 is what I'm basing this number off of. I risked 289 to make 103, and that gives me the 35. Total commissions here were 517. Total profit now is 206 because I had 2 contracts here. We'll hit save. There's actually a bug right now. Hopefully tonight I'll get this fixed where this will just hang here. But yeah, we can just close this out. Okay, and now if I refresh, that Costco position will be gone. Again, that bug will be fixed hopefully by tonight. Okay, so yeah, let's get back over to the test account. Break even is the stock price at which we will be profitable. So this is 128.8, and how that works is you take 130 minus the credit collected 1.2, so $1.20 minus 130 equals 128.8. That is our break even. Again, for iron condors, this is useful because you'll have 2 break evens on your upper and bottom end. Opened is how long it's been opened. I opened it today, obviously, just now. And max ROI, again, this is the figure that we just saw, where it's taking this 380 value and then assuming that this contract went to 0, I believe. Okay, so I think that covers it here in Tasty Tracker. And again, this is what it will look like once you have multiple positions on. So over here, we can go to expiration. That's the default view. We can select by security, and we can see what positions I have on for each security. And this is my 2020 small account challenge. So if you want to, you'll be able to watch those videos as they come out as well. I'm still working on it. And then the new group by, which I just added this week, is opened. So I can see what days I opened it and when. So on 12/4, I opened up these 3, 12/15, 12/16, etc. So you can see sort of the transaction history. That same information is available over on the options history page, but that is a total positions, whereas these are only your open positions. Okay, I wanted to make a quick note here. Some people asked about having a cash account versus a margin account. Most Robinhood accounts, when you get them, are going to be margin accounts. Typically, when people think about margin, they think, oh no, this is a terrible thing, and I would agree. You should not be borrowing money to invest money unless you really, really, really know what you're doing and have some way to get that money back if you're wrong, right? So typically you pay money to have access to margin. And so say you have $2,000, Tastyworks and Robinhood will allow you to usually double that. So you can invest 1.5 or 2 times as much as you have. So maybe you could invest $3,000, but you have to pay a little bit of a fee to borrow that money from Tastyworks or from Robinhood. That's what Robinhood Gold is about. What we're doing here is different. It's still a margin account, but because the risk is defined and Robinhood knows that, I can actually use it for less than the $2,000 that's normally required to borrow from the broker to purchase more stock. Because this is different, we don't have to pay any fee to use the margin, but it is required in order to sell spreads or sell a call or a put. So I have a video on that on verticals and why I love them. It's in the in my list of videos if you want to search that. It goes in a little bit more detail, but you will need a margin account in order to do this. Otherwise, you will see the collateral needed is much, much greater than what I put on for the Apple one today. And this is especially critical because Apple now, since the split is a lower valued, lower dollar stock, I play Amazon a lot and a lot of other high dollar stocks. And so you're really not going to be able to afford the collateral if you are in a cash account. I recommend having both. I have a cash account, which I do other trading in. The nice thing is with a cash account, you can start off with a very small amount and day trade, and you don't have to abide by the PDT because it's a cash account. But for what we're doing here, for spreads, you need to do it in a margin account. So if you don't have one, again, you can sign up for a Tastyworks account, which I have my link in the description. Robinhood, to my knowledge, only allows you to have one account. That's why I'm trading here with my wife. But Tastyworks is great because they have this account drop down here. So you can have as many accounts as you want with Tastyworks. So again, I would, if you already have a Robinhood account and it's a cash account, then go ahead and sign up with Tastyworks. Otherwise, you should be good to go on your Robinhood account. Okay, so general strategy. A lot of people are asking what my theory is behind what I enter. I'm looking for stocks that are industry leaders. They've built a base and are at support. They're on a steady trend up. And so by doing a good stock to begin with, we have that built in. So let's just hop over here again to Apple. Look at the increase here. Now, if you have a stock that's going up and down, up and down, and up and down, you have no guarantees in anything. I mean, there's no guarantees in life to begin with, but I would want a stock that is trending upward if I'm going to enter in a bullish position to help me know that the odds are in my favor, that putting on a bullish position, anticipating the stock will go up if the stock itself tends to go up, which Apple does. Okay, so that's one thing. I'm looking for stocks that are more than $50, below $50. I tweeted about this today. Below 50 is really, really hard to do for credit spreads. So if you're doing that, you might want to do a debit spread, do some long calls or long puts, even buy the shares directly, or do a cash secure put. Those are all better ways to play stocks below $50. It's when you get to the $80 or $100 range that my style works out better. So just fair warning, if you try this on lower dollar stocks, you're going to have a tough time. It's the same thing why I do $5 wide versus $1 wide spreads. I've talked about this before in previous videos. $5 wide spreads work better because the Greeks are offset less. If you choose two strikes that are right beside each other, as you're selling one, you're buying the other. As one goes up in a Greek, it will go down in the other one. And so they offset each other so much that it's really hard to be profitable. Whereas if you're getting it $5 wide, it allows some room there for the Greeks to work for you. I'm generally choosing 40% in the money strike. It's best to do that over here. Again, with this column here, I can see very, very easily that I might want to do something like that in Costco because this is around the 40%. I'll evaluate that. 153 looks pretty good. But if I go up to here to 43%, now I can get 198. So that seems something more up my alley. Then I would come over here and say, okay, but what does Costco's chart look like? Okay, so Costco just had a big update. It's probably not the best time to enter because you ideally will wait for an opportunity like this or an opportunity like this. This one didn't pan out, but when you get these bounces on the SMAs is when you can get an opportunity for something like that. We can see the RSI is already coming up. So I think there is still some strength. We can see the little squiggle here I have drawn, which is my projection of where it will go. But we've already missed half of the leg, so you might want to wait till it comes back down here and retests the 372 range before it pops back up. So that's kind of what I'm looking at when I'm charting. And then I use that in combination with this to determine, since I've already decided that now's maybe not the best time to enter this, now I might go up here to be a more conservative play at 36 or maybe even 31%. So if I were to go 365, then that brings me down here, which says, that's pretty safe because we would bounce off of the 100-day potentially. But then I have to say, okay, is accepting 123 and risking 377 worth, or 382 actually, is risking 382 to get 120 actually worth my time? And I would argue at this point, no. So there I've determined both by charting and by the trying to price the position that doesn't look like a good deal to me. You'll get good at spotting those. Actually, I shouldn't say good deal. I think everything is priced as it should be, but it's not something that's ideally in my wheelhouse at this moment for Costco. Okay, so I like 45 days to expiration. Why? Because that gives me enough time to let the position work. And even if the position goes against me, I still have plenty of time for it to come back in my favor and get out. Yes, if you do 30 or 20 days to expiration, you'll be able to probably net out with more income if everything goes your way. But heaven forbid the market tanks and you have a whole bunch of positions that expire next week, you're never going to be able to offload those profitably. Whereas mine with 45 days or 60 or even 90 days to expiration, I have so much time that if the market fundamentals are fine, that they will recover in that time frame. So here I have following the 20-day up. When I say 20-day, that's the 20-day SMA. I like ideally, and my Twitter profile page has an example of that. But we can see here, if it followed this purple line up like here, we can see right here we cross over on Costco. This is a perfect opportunity to have confirmation and enter. And then we could have held that the whole way up here. Of course, I would have closed probably, I might have even been able to get 2 positions off here. But then once we cross back below the 20-day, I'm not necessarily going to close it just because it crossed, but that does give me some pause to know that 20 is no longer working as support, so now we're down to the 50. Oh, no, 50 is no longer working as support, now we're down to the 100. And then after that is 200. So, so ideally, especially like in the peak of Corona recovery, everything was following the 20-day up. Those are very strong and great stocks to follow. Okay. You can also use my scanner to help get ideas. So let's go over here, go to lead scanner. So you can apply a bunch of different filters here to get what you want. I use this in order to find new positions to sort of keep my ear to the ground. So again, I'm going to want something above $50. So first thing I do here, clear pennies, which I define as anything below 50, which nobody does that, but I call them 50 and below penny stocks because I'm not interested in this. Anyway, so first of all, I filter those out. Then I'm going to be looking at the year change, and we can see Tesla has been huge. Obviously, we all know that. Fiverr has been a great company, which I actually haven't played that much, so that might be something that I'm interested in. And not only has it had a good year, but it's actually off of the high by 15%. So if we click over here on the chart, this will just pull up a quick view of Fiverr, so I can get an idea of the chart. This is just a generic chart. I would still pull it up over here to get a handle on what it's doing. But anyway, you can use the scanner there to help you identify positions, and this is all free as well. After I found the stocks that I'm mostly interested, it really boils down to 15 or 30 stocks at a time, and I'll run with those stocks for quite some time. Very slowly I'll remove them, and very slowly I'll add in new ones. But I don't have a scanner that I use on Thinkorswim like a lot of people do to pull out all of the different tickers that they might play. People that are doing that are typically looking for big gainers with a lot of momentum. I'm looking for slow and steady growth consistently. And so to become a consistent household name, something like Amazon, you already know them because they're household name. So I hope that made sense. Okay, so I put in a closing order at the time of entry for 50%, and I very, very rarely touch that. If there's a huge move up very early in the expiration, I might close it altogether, or I might roll up that position. I have videos on rolling. If it was maybe down a lot of the time I've been holding it, or just flat, but it's still green, it looks like it could be profitable and will be profitable. It's just that maybe earnings is coming, so volatility is up, which means those contracts will hold their value longer. Then I might hold later into the expiration for more money, but typically I'm looking to close out 2-3 weeks before expiration at a $50 50% increase. Okay, so future videos, I said this before, will really only cover the comment section of the entry, what I was thinking, why, where, those kinds of things. I'm not going to be doing these housekeeping notes and training unless I'm specifically asked about something. And if you're interested in what those videos will typically look like, you can look at the most recent videos from the 2020 series. These videos coming out for the 2021 series will be much, much slower because it's a snowball rolling. We've just started today. It will take a while for all of that to work itself out and to get the ball rolling. So I hope this was helpful. And if you have any questions, let me know in the comments below, and let's get this done. Thanks. Bye.